Hello and welcome. Today we shall be taking a look at investment management company City of London Investment Group PLC. The company has a market capital of £108 million and is currently ranked 268th in the UK FTSE Small Cap Index. In the financial year to the 30th of June 2018, CLIG had a revenue of £33.9 million and an operating profit before tax of £12.79 million, which gave it a margin of 37.7%. It currently pays an annual dividend yield of 6.67%, which is paid semi-annually in March and October. This dividend is covered 1.46 times by the earnings per share. The company was founded in 1991 and floated on the London Stock Exchange in 2006 at a price of 180 pence per share. The current CEO, Barry Olive, established Olive & Partners in 1987, the stockbroking business from which City of London was founded in 1991. Barry shall retire on the 30th of December 2019 and intends to sell 500,000 shares at prices of £4.50, £4.75 and 500 pence each. Tom Griffiths, the current Deputy CEO, will be appointed Group CEO in early 2019. CLIG is an asset manager focused on closed-end fund investments for over 150 institutional clients. It employs over 70 people, including 12 fund managers, at offices in the UK, Philadelphia, Singapore, Dubai and Seattle. The funds under management are broken down into 4 strategies: emerging markets, developed, opportunist value and frontier. Each of the key strategies continue to rank in the first quartile within their respective peer groups over the past 5-year period. For the previous 5 years, CLIG has had a consistent revenue of between £24.2 and £33.9 million and an operating profit margin ranging from 30.6% to 37.7%, which gave it an average of 34.6%. The forecast for next year is a fall in revenue of almost 10% to just over £30 million and a margin of 35%. With generated earnings for the previous 5 years of between 19.5 pence and 39.5 pence per share, the dividend has not always been covered by the earnings per share. The earnings per share is forecast to decline 16% for the financial year 2019, but the dividend will be maintained. The share price standard deviation for the previous 12 months was 22 compared to 252 for the FTSE small cap. The current share price is 48% above the 52-week intraday low, and the bid-ask spread is 4.4%. The 17th of July trading update stated funds under management were $51 billion, representing a 10% increase in US dollars terms for the year. The year-end final results declared the 17th of September stated that there was no change to the funds under management. The 8th of October trading update, however, saw a decline in funds under management to $5 billion. The 16th trading update declared a further decline in funds under management, this time to $4.6 billion. The 8th of February half-year results to the 31st of December saw funds under management at the end of January at $5.1 billion. Revenues fell 9% to £15.6 million. Profit before tax fell to £5.2 million from £6.6 million at the end of 2017. An interim dividend of 9 pence per share, together with a special dividend of 3.5 pence per share, was declared. Cash at the end of 2018 was also reported at £18.7 million. The company stated that 2018 proved to be a year of major challenges across the emerging markets, particularly in the half year just ended. Emerging markets suffered a fall of 15%, frontier markets a 16% fall. The Argentinian market alone fell 52% in 2018. With net outflows of $215 million to June 2018 in the core emerging market strategy, City of London's decision to diversify away looks to be a prudent one. Global market volatility and recent emerging market weakness are reflected in the funds under management and net inflows. With a profit margin constantly above 30% and the return on capital at almost 58%, both indicate the CLIG is a well-run company, and with a current operating margin of close to 37%, the dividend looks sustainable and covered by earnings. The current price earnings ratio is 10.3 compared to the FTSE small cap of 12.1, and the dividend yield of 6.67% compared to the FTSE small cap average of 4.1%. This dividend is covered 1.46 times by earnings. For these reasons, I've given City of London Investment Group a rating of 4.9 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.